Hello everyone, we are going to study about the application of Schedule 3 Part 1. Schedule 3 Part 1 is basically the balance sheet of financial statement that summarizes companies' assets and liabilities and shareholders' equity at a specific point of time. Balance sheet of company is prepared in the form prescribed in Part 1 of Schedule 3 of Companies Act 2013. It is prepared in a vertical form and it should have the values of previous year. It classifies liabilities in two parts, that is equity and liabilities. Liabilities include external liabilities of the companies, whereas equity is the liability towards shareholders termed as shareholders. Now let us see what comes under balance sheet. First of all, you will write the name of the company and then balance sheet as at. As at is very important to write his fund. Now next you see what comes under the heading equity and liabilities. You will have to write shareholders fund, under which you need to write share capital, reserve and surplus, money received against share warrants. Now next to that you will have share application money pending allotment. Now next to that the third heading is non-current liabilities. For that you can remember it as LOL. LOL means laugh out loudly. By laugh out loudly, LOL, you would be able to remember the subheads which come under it would be long-term liabilities, other long-term liabilities, long-term provisions. So here you can see LOL. These three, when you will remember, you would be able to remember the subheads which comes under non-current liabilities. When the borrowing will be made, then only provisions could be made. Hence borrowing will be first and provisions will be later. Next comes your current liabilities. The fourth one is current liabilities, under which it comes short-term borrowings, trade payables, other current liabilities and short-term provisions. Now this you can remember as STOS, which means save tree and ourselves. Now save tree and ourselves, if you will remember, you would be able to remember the subheads which comes under current liabilities, just that is short-term borrowings, trade payables, other current liabilities and short-term provisions. Here also when borrowings will be made, then only provisions could be made. Hence STOS you can remember easily. Next to that we do the totaling of equity and liabilities, and then we write assets because it's in vertical format. So in assets there comes the first heading, that is non-current assets. Under non-current assets, the first thing which comes is fixed assets. Fixed assets is tangible asset, intangible asset, capital work in progress, intangible assets under development. Now fixed assets are those assets which are held by the company not with the purpose to sell but with the purpose to increase earning of the business. Hence it includes tangible and intangible assets. Tangible assets are like land and building, plant and machinery, furniture and fixtures, computer.
Then comes intangible assets
that cannot be seen or touched, just like goodwill, trademark, rights, patents, intellectual property rights, etc. Now next to fixed assets there comes non-current investments, assets, long-term loans and advances, other non-current assets. Here I would like to give you a hint. FAT IC in DLO. By that you can remember FAT IC in In means brings in, DLO, depression, long term laziness and other difficulties. So by that you would be able to remember all the items under non-current assets. In, that is intangible assets. C for capital work in progress. Then again fat IC in. In, that means it brings, I for intangible assets under development and N for non-current investments. Long-term laziness and other difficulties. So by that, next to that you come and see what comes under current assets. It includes current investment, inventories, trade receivables, cash and cash equivalents, short-term loans and advances, and other current assets. These all items you can remember it as CIT, CSO. That means CIT, those who come in check the income tax. So CIT and CSO, when they come, they just tells cash show karo. So by that you can remember it as CIT, CSO. When they come, they charge you for showing the cash. So all the items under current assets you can remember as CIT, CSO. Current investment, inventories, trade receivables, cash and cash equivalents, short-term loans and advances, and other current assets. The balance sheet should disclose authorized capital, issued capital and subscribed capital besides the amount called up by the company and paid up by the shareholders. So it should be kept in mind that all these details are given in notes to accounts. Authorized capital is authorized by memorandum of company to be the maximum amount of share capital of the company. Issues capital means the capital company issues from time to time for subscription. And subscribed capital means part of capital which is for the time being subscribed by the members of the company. Shares are called as subscribed and fully paid up in condition when the company has called total nominal value of shares and company has received the called up amount. Now since the company has called the total nominal value and has also received it, it will be shown as fully paid up shares in notes to accounts on the share capital under subscribed capital. But there may be a condition when subscribed but not fully paid up situation arises. That happens when the company has called the total nominal value of the shares but has not received the called up amount. Hence, the amount called in and not received are classified as subscribed but not fully paid up in the notes to accounts. Again, when the company has not called the total nominal value of shares and shares are classified and shown under subscribed but not fully paid up. There may be a situation exist that the company has not called the total nominal value of the shares. Also, it has not received the entire amount called on the shares. The amount not received is termed as calls in arrear. Continuing this, I would like to tell you, you just assume that out of 1,50,000 equity shares, if any shareholder holding 5,000 have not paid his first call or at the rate of rupees 10, it means rupees 10,000 is calls in arrear. What is reserve and surplus? It is shown in as a single amount on the face of balance sheet against reserve and surplus under shareholders fund. Reserve means amount set aside out of profit and other surpluses which are not marked in any way to meet any particular liability known to exist on the date of balance sheet. So here how to make it could be well understood by seeing this example. Crystal Limited was formed on 1st November 2019 with capital 12 lakh divided into equity shares of rupees 10 each at a premium of rupees 2 per share. It is offered 1 lakh shares to the public. The issue price was payable as follows: 4 with application, 6 with allotment, including premium. The balance will not be called till the date of balance sheet. All the shares offered by the company were subscribed for. One shareholder holding 1000 share paid the balance with allotment. Another shareholder holding 800 did not pay the allotment money when due. You are required to show the items under equity and liabilities in the balance sheet of the company at the end of financial year with notes to accounts. Now how to make it? Just see. Simply you will make the format which you have just seen. Equity and liabilities. Under that head you will write shareholders fund and then share capital. Now how much amount to be written in share capital in note 1 you will see in the notes to accounts. So that detail you will have to calculate in notes to accounts. Now let us see how to make notes to accounts. There you will just write share capital, authorized capital, that is given 1,20,000 equity shares of rupees 10 each, that will come 12 lakh. Again issued capital you will have to write, that is 1 lakh equity shares of rupees 10 each, that you will write 10 lakh. Then you will write subscribed capital. In subscribed capital you will just calculate the amount by writing subscribed but not fully paid up. Now how much it is? 1 lakh equity shares of rupees 10 each at rupees 8 called up. Here we have to write called up value, and then we will deduct the calls in arrear of the person shareholder who did not pay the allotment money, who was holding 800 shares. So calls in arrear would be 800 into 6, that is 4800. So that will be deducted from 8 lakh. Then the amount received on subscribed capital will be 7,95,200. So this amount will be written in the balance sheet. Here you calculated it in notes to accounts, and the final value you will write in the main balance sheet. Then comes the calculation of share reserve and surplus. Reserve and surplus rupees 2, so that will be written as 2 lakh in notes to accounts, and again that will also be copied here in note 2, the reserve and surplus, that is 2 lakh. Then you have to write current liabilities, and current liabilities is your calls in advance money only. In this question it is given that current liabilities. So this is how we make the balance sheet. You can try other sums also, and don't panic, it's a very easy chapter and very scoring chapter. If you like my video, please like and subscribe. Thank you.